Welcome back to another episode of Big Wick Energy podcast. We're going to be going over risk management today, the thing that can make or break a trader. If you're risking too small, you are going to be limiting your growth, but if you're risking too much, you could be blowing accounts. So we're going to be talking about that in this podcast, tips and tricks for you as the watcher and audience to try and improve your trading and see where, we sort of went through our trading journeys, our learning journeys, and where we are now. So yeah, let's get into it.
Yo, I'll tell you what I want, what I really want.
Tell me what you want.
What you really want. I wanna be down. Wanna dig it.
One of the things that most people don't look at when they first get into trading is how to structure their risk when they are going into trades. So, for you guys, when did sort of risk management start coming into play? Once you guys started getting, because I know that you started with a $100 account and you made 150% one night. When did that risk management start coming into focus for you?
For me, I think it was like once I started getting into funded accounts, because I was like, man, this is an opportunity to make some actual money. And when I first started, bro, I didn't really know what risk management was. All I knew was just risk 1% of an account. Right. In hindsight, looking back, 1% was quite a lot because I think it was like with the HFT fund prop firm, I think it was like 10K drawdown, I think, with a 100K account or something like that, eh? Yeah. So like risking 1%, my initial trade was like risking 1%, lost it, and then I was like, damn, I've only got 9 more trades if I'm risking 1%. So I like dropped my risk down quite a bit. I think I was risking like 0.5%, maybe 0.25, and then just started like slowly building up my profit. And so that was like a good lesson for me to learn, is really honing down on risk management, especially when it's, not really a 100K account because it's only 10K that you've got to play with. So yeah, it all kind of came down to like the drawdown limit and what I was willing to risk. So yeah, start of your journey is probably a good idea just to take it easy on the risk. But as you get further into your journey, the more confident you are as a trader, then you're looking at setups that are probably going to be a bit more safer than other setups, and then you start to look at adding more risk into those setups. So yeah, my risk management has changed heaps. Yeah.
And you've primarily done a lot of funded accounts rather than live accounts.
Yeah. So I've done mainly just future prop firms, so Apex and Top Step. But I treat combines and evaluations a lot different to an actual funded account, just because I don't know, just costs nothing, eh? It just costs nothing in my head. Just costs nothing to, pay for a reset or, pay for the actual combine itself. So, I'm pretty much max risk or full margin when it comes to combines. But Jordan's got like a great way to manage risk when it comes to evaluation.
So for those bigger Apex accounts, I'll pretty much full port to get that first 10K because we're chasing 20K.
Yeah.
And then the final 10K, I'll kind of split. I won't go full marge, I'll go 15.
Half marge.
But then I almost treat that final, then I kind of bring back in my risk management for that final 10K.
Yeah.
And adjust it so it's probably more dynamic.
Yeah.
Instead of keeping it fixed the whole way through.
Yeah. Why do you change? Like you made your initial 10K, your full margin there.
Yeah.
Why then do you go to a half marge?
I feel like it all just rolls on from that first 10K. That's the hardest. That's the hardest for me mentally. Like if I can get past that 10K, then I know I can easily make that final 10K. And so whether or not my next trade or A+ setup is 5 or 7K, then I've only got 5 or 3K to make.
Yeah.
So and then that's when you the lights at the end of the tunnel, so you want to hone in that risk management.
Yeah, nice.
And pass that account.
Yeah.
But that's how I treat my vowels anyway.
That's a great way to look at it, I reckon. You know, if money isn't an issue for paying for an evaluation,
Yeah.
Yeah, and you're a confident trader, you kind of have a strategy locked in, because you're targeting like 1 to 3s or
Yeah.
yeah,
Yeah, pretty much.
Was it much different, like being, sort of a beginner trader? Because you sort of come in and about a month into it, you got those other funded accounts. Like, was it a little bit different as a beginner trader? Your risk management.
Yeah.
Did you have risk management then?
Didn't
Or
really know what it was. I was kind of just
real?
yeah. Obviously, you get that one, you get honed in that on that 1% risk, but yeah, no. Even with the top step accounts, I treated them differently. Like the combines, I'd be doing 1%, trying to get that 1 to 3.
yeah,
And then do that 1 to 3 again the next day. As soon as they turn live, though, I'm going down to 0.25.
yeah,
Yeah,
trading the drawdown limit.
yeah, and then not thinking you have 50K, for example, but having that what is it,
2,000. Yeah,
that's your account size.
yeah. You had like a live top step account. What would you risk? Like, how many cons would that be? Like 1 or 2?
Yeah.
Initially. Yeah.
Yeah, and then just still 1 to 2s, 1 to 3s.
Yeah.
Just slowly build it up.
Yeah, nice.
So your sort of risk management stuff didn't come into play until you really started developing your education as well.
Yeah.
Right. That's crazy.
And then realizing that I could trade.
Yeah.
Oh yeah. Better sharpen these skills.
Yeah, wow.
But even now that I've stepped in to my live account as well, that's different again for me. Like I'll risk 1 to 2%, per trade. But still being conservative and only targeting that 1 to 2, 1 to 3.
Yeah. Why does it change?
I guess like those daily drawdown rules and stuff. There's none of that.
Doesn't apply.
Yeah, it doesn't apply. So as long as I'm confident in my setup, then I should be able to achieve that 1 to 2.
Yeah.
And then that's 4%
Yeah.
on the account,
Yeah. Nice.
and then 50%.
Yeah, that's crazy.
But how many trades did it take you to get to 50%?
Well, I don't know. I'd have to go through it all. But that was over 2 weeks, just over 2 weeks.
Bro, 50% on a
Yeah.
live account in 2 weeks.
That was, yeah.
Sheesh.
That first day though, that was a good wake up call.
Yeah.
What was the risk management like on that day?
That
Did
was
you go down 1,000 in
Yeah.
that day?
yeah, that was risking 2 to 3% per trade.
True.
And just boom, boom, boom.
True. Damn, 10% down already. True. So really, you made like 60%. Like get out of drawdown and then profit.
Yeah. A few of those, there was a few good trades where they just ran overnight. I already had my stoppie in profit because I had a stoppie. Was in profit.
Nice.
And then I kind of knew that it was gold. Actually, it was all three. I had a gold, a US 30, and a NAS, all on different days. But I knew they were all going to a level.
Yeah.
And I was like, and now that not being futures and being able to just hold the trade,
Yeah,
that was a cool feeling. And knowing that it was already in profit, so I could walk away and know either way I've either made my 3% or whatever it is,
yeah.
or I'm cracking it.
Damn, gee, that's on. Yeah, no unrealized like drawdown rule or any of that.
Yeah. So waking up to $1,000 extra in your account's like,
Damn.
Real money.
real money, yeah.
Is it different in that sort of mentality as well? Which is probably like that's why I don't like trading funded accounts. Mainly because I've been trading live accounts my entire career. Like I didn't know what funded accounts we were really until last year, sort of thing.
That's crazy.
Sorry, not last year. The year towards the end of, what was it, 2023? I think we started doing like those HFT ones. But those rules are crazy. Like, although like those funded accounts are good for, a good opportunity for people to gain access to capital, the amount of rules that's on it is wild, and that's why I would always choose a live account over funded. Obviously, depending on if they were going to give me $1 million in funding compared to like $100 live, like obviously you're going to take that. But
For a seasoned trader though, that's prop firms are on.
Yeah.
Taking, not free money, but
Yeah, facts.
It's sort of that patience, eh? Like, it's those rules that they get me as to why I don't really want to do them.
Yeah, because you have to adjust your trading to the rules there.
Yeah. I have to adjust my trading to all of that, and I don't like doing that. I would rather just stick to what I'm doing, stick to what I know, and just continue doing that. But you do, like you said, you do have those opportunities to be making free money, essentially.
yeah.
But it is different risk management as well. Like you guys were saying, risk management with the challenge compared to the live account, and then you would know now the difference between both of those, and then now going into a live account, like the risk management changes heaps.
Yeah. I still enjoy trading props though, eh? That's the challenge delay.
True. Yeah.
Sort of proving yourself.
Yeah. I love it.
I don't know. I sort of find that challenge though. Like, I would rather challenge myself in a live account to make the 2 to 3%, 2 to 5% a day. Like, that's the challenge every day to be trying to do that. As opposed to, I don't know. I think it's my mentality around potential like pointless trading, like with the challenge.
Being denied because like a payout, put all that mahi in, and then denied for a real fine print rule that.
Yeah. I mean, not even that. Like, yes, you are taking a trade on a funded account, and you're using whatever risk management you're using. If you are doing a challenge, you could be over trading it, whatever. But it's made 10 grand, whatever, on the funded account, but then like it's not real. As opposed to making 10 grand real money, like that's a difference, and the way your trading's going. Like, I'm sure risk management would be different on both of those occasions. Like, if you're making say 10 grand on the challenge, you're sort of over risking. But if you're making 10 grand in a live account, that's realistically going to be like 4 to 5% on a huge account.
Yeah, true.
You know what I mean?
Yeah.
But yeah.
Wait, can we backpedal a little bit? Like, just for those who are like getting into trading, like, what is risk management?
What is risk management?
Yeah.
What is risk management? So like risk management is how you're controlling your capital. So you want to be, obviously you have to risk the capital. So capital being the money that you're going to put in, you have to be able to risk that so that you can get the reward from it. Risking say $100 to try and make $200 sort of thing, 1 to 2. So it's, essentially risking, your capital to try and make gains within the market, but also, protecting your capital. And you don't want to over risk all of your money. Like, say you make $100 account, you don't want to over risk and risk $50. Like, it is $50, but realistically that's 50%. And I think like a lot of beginner traders that don't, sort of understand that is once they actually end up going into live accounts or whatever, and if they were doing that on 100K, they'll be risking 50 grand. So yeah, that's which is crazy. Like, when you think about it, But yeah, that's essentially what risk management is. You're trying to take a risk within the market because you have to, but you're trying to manage that risk properly so that you're protecting your capital and you're making as much money as you can from risking whatever you're going to be risking.
Mm.
Yeah.
Yeah, nice, bro. I think a lot of people, when they hear risk management and trading, they think about it like in terms of gambling. Like a lot of people make comparisons of trading and gambling, which, you know, makes a lot of sense. But when you have an edge in risk management or like an edge in your strategy and like your profitability with probabilities, your edge becomes, you know, more than a standard gambler would make in a casino. So like if you're playing roulette, I think you put your chips on black, you're going to make a 1-to-1. So if you put $100 on black, you're going to make $100 return. So that's going to be a 1-to-1. But the risk that you're going to get there is either, I think it's 36 or 37. Is it 30? 37?
What can it be for? 36.
Plus the green?
Yeah, 37.
37?
The green.
Yeah. So then, you know, you're not really risking that much. And so that's why your reward becomes a 1-to-1. But if you chuck that on a number, like say we chuck it on 23, you know, you've got 1 in 37 chances of winning. Yeah. And so 1 in 37 in a percentage is like, I don't know.
If you're risking $100,
Yeah.
3,700.
Oh, no, but like as a percent wise, like what are your chances of winning that? It's like 1 in 37, you know?
Mm.
Oh, yeah. It's
nothing.
Yeah.
Yeah. And so when it comes to trading, you have a strategy, you know, you've got the data behind you. Your chances of winning are more like 6 to 7 out of 10. Yeah. So like you have a 70% of winning a trade.
because you get that win rate.
Yeah, because of the win rate.
Yeah.
Yeah. And so when you have a good, you know, plan, strategy, data collection, then that's when your risk management comes into play, and then, you know, your 1-to-1s that you were gonna gamble end up becoming like 1-to-3s, 1-to-5s. You made like 19% the other day, 1-to-19. You know,
You're never going to get that consistently.
yeah, consistently.
Gambling.
Yeah.
I don't know why people make that comparison of, you know, gambling and trading. It's so annoying.
Yeah,
And I think, like, you get it so often, bro. I get it on the TikTok videos so
just a gambler.
much, bro. Yeah, it's like trading's just another form of gambling.
yeah,
Like, I like, it annoys me.
yeah.
It's so annoying
Yeah.
because, like, trading's actually a skill.
Oh, facts.
You know, like, you can get professional gamblers. Hey. No.
But like a poker machine,
Yeah, it's random, bro.
you can't walk up to it and start looking at its previous data and mark, you know, and using that special indicator. No, you know what I mean? Like, you put in the mahi here, doing our analysis, and we get our bias, and that's how we find our edge in the market.
Yeah,
You don't get to do that walking up to a poker machine.
yeah.
I had a bit of an edge on 5 Dragons, though.
Cousin, you were doing
Playing the multi piano. I was a musician back in the day. But that's it. Like, you can't go to a poker machine and have a strategy. You know, like, there's not a strategy of pushing the buttons differently. It's going to make, you know, something happen. It's just all random. Whereas when you are trading, you are doing this every single day, and patterns emerge. There's no patterns that are emerging in you know, pokies.
No.
Or, like, you know, blackjack, whatever. Obviously, there's a strategy for blackjack, but people get caught out doing that, and it's not going to be, you know, sustainable over time because, you know, casinos cancel people. They ban people that are doing that. Whereas with this, it's a skill set
Yeah,
to be able to do this.
yeah.
100%.
Like your edge ends up becoming, you could say, like you end up becoming the house. You know, you're not the gambler anymore. Like your edge is the house. So, you know, when you have the right strategy, the right trade plan, you know, you are the house, and then you just start winning more than you're losing, and that's when you become profitable. So, if you want to become the house,
learn the strategy. That's such a good point, though. Is, you know, the risk management is taking that sort of gambling side out of it too. You know, you don't want to be risking all of your money. You know, like you're not going to go to, you know, let's reference to the poker machines again. You're not going to go to the poker machine, chuck $100 in and only risk, you know, $10 of it to try and make money, and then take the 90 out. You're risking that whole $100 because you're going to spend it. And that's sort of the mentality that comes into it with beginner traders. They chuck $100 in, risking the whole lot to try and make money. Whereas, yeah, like we ask that question with a lot of people that come onto the podcast, like how will they spend their $1,000 if they are getting into trading? And all of the time it comes down to knowledge, to try and build that knowledge base so that when they are trading and looking at the market, it's not going to be gambling. And like I think a lot of people that are making those comments that trading is just another form of gambling are just not educated enough to have a strategy and to have risk management and have a trade plan that they can do every single day, so that they are making consistent wins.
well, they just don't want to believe it. You know,
They just don't have anything better to do.
yeah. It's understandable because trading is so lucrative that it just seems like it's impossible, and you know, you can't be that profitable.
Yeah.
Like, understandable, but when you're in the space and you've actually traded, then you know like how legit it is, and like the pathway that, you know, it opens up.
Yep. If people don't know, they just speculate.
Yeah, that's it.
Yeah, because they can't believe it themselves.
Yeah.
If they don't believe that they can do it, like why can anyone else do it?
That tall poppy syndrome.
Bro, that's what it
Yeah,
is.
flat out.
You get that so much.
Crazy.
That's annoying because like then you're like, well, just try it then. And like, nah, you know, and just very stubborn, I guess. Yeah. But yeah, the risk management side of things just takes that whole gambling nature out of trading. Like trading is not gambling. You know, like there is risk involved for sure, but risk management takes the whole gambling out of trading, which when you are risking, you know, whatever money that you are going to be risking, then that's because you're taking the opportunity to try and put your knowledge to work, try and make money in your craft, sort of thing. It's the same thing as if you're gonna, you know, try and buy something to on-sell it, you know, on-selling money to make profit, sort of thing. There's going to be risk in everything. Like, you know, say that you're going to buy a car for cheap and try and on-sell it for like $1,000 profit. There's a risk there that you're not going to sell it for that extra $1,000. You know, there's risk in every single thing that you are going to try and do. And if you are scared, like you're never going to do it. So, but yeah, having a risk management plan is definitely something that a lot of people overlook, but it's definitely going to be the key for, you know, beginner traders wanting to take this serious and making it work for them so that they can end up making money long term, rather than a short term gain.
Yeah, for sure. Risk management also plays a massive part in your emotions. Like if you're risking half your account, you're watching like you know, you're watching how that candle moves. Like, and so if you are risking half the account, you're watching how that candle moves. You know, your emotions are getting way too involved. You're not logical about the trade. That's like, you know,
Yeah, it's definitely a tool to control those
shucks,
emotions.
Yeah. And if you are like risking too much, then just like de-risk, drop your risk down, and you'll notice your emotions are like just way more chill, and you're not so worried about the trade. But then when you do win, it's like, fuck, I should have risked it all.
There's sort of two sides to it too, you know, like you don't want to be under risking, but you also don't want to be over risking as well. So there's like a middle ground that you have to understand. Because like as we're saying this, you know, like don't risk too much for this and that. You know, people might come into it and want to be like, okay, well, I'll just like super de-risk. But then it's like, you know, why do that when you know that most of the trades that you're going in, you are winning.
Yeah.
So if you are risking the right amount, consistently you're going to make more money than what you're going to lose anyway.
Yeah.
But that's also, you know, like a thing that a lot of people do is they're under risk. Have you ever done that?
Yeah, when I first started.
Under risked
Yeah.
and still made 150%.
Nah, not that account, but when I had that funded, you know, instant draw, like when I got into drawdown and I was like, fuck.
Oh,
Didn't know, you know, didn't really know what I was doing. Thought I did. And so de-risked quite a bit and then just helped me like build up the strat, build up the knowledge and then put myself in profit. So, yeah. What is your risk management plan at the moment?
My risk management plan with my live account. So I primarily just trade lives. Yep. I don't really muck around with funded accounts. But at the moment, I'm just risking 1 to 2%. It depends on the setup. Depends on the session. If it's out of my main session that I'm going to do, so London session, it's not my main session, I'm only risking 1%. I don't want to get, you know, if we are going to be trading in London session and there's a few trades setting up, I don't want to potentially be losing those and going into New York, which is my main session, already been down and drawdown because that mucks up my psychology. Yeah, going into that. So I'm only risking, you know, 1 to 2%, depending on what time it is, and yeah, just going from there. But again, like it's sort of, you know, dynamic with what is sort of going on. If I am already up, you know, say in London, you know, 2 or 3%, then, you know, I have an extra, you know, sort of 2% there that I can risk. So even if I am risking like that 2% or like 3%, for example, to try and make, you know, whatever it's going to be in New York, then I'm going to increase that and potentially end the day on break even, or I'm going to end the day hugely on like, you know, 9 to 10%, depending if we're doing, you know, like a 1 to 3. So yeah, it's sort of, I would say that my risk management plan is kind of dynamic, depending on the different variables that we're sort of trading. But yeah, it's just,
I like that, how you manage it going into NY.
Yeah. What would you say yours is? Like just with your live account?
Oh, yeah, that's that 1 to 2%.
Yeah. So you don't really take into consideration like a dynamic approach?
Nah. Oh, not the session, like not session based. Right. But I like that.
Damn, bro's getting tips over here.
Because well now heavily just trade NY. But obviously, you know, on our lives in that we're trying to catch those trades in London as well. Yeah, I like that. Dynamic.
Dynamic risk management.
So you would say that yours is fixed? Like you would have a fixed...
well, not my fundeds and that. That's
that's dynamic,
that's
right?
definitely dynamic.
Yeah.
But my... my live has been fixed.
Yeah.
Pretty much 2%,
Would you say you're more of a dynamic with your funders?
Yeah, I'm way more. Just depends on all the variables. If I've made some profit during the day, then I'm probably going to risk a bit more because I'm just like, oh, it's free money to play around with, you know. And if I lose, then I'm probably at break even. It is what it is. But going off the stats, you know, if you win, I'm winning more than I'm losing, so it just makes sense to add a bit more risk into the next trade. So yeah.
A buffer's nice, eh?
Yeah, bro. Makes so much difference, man. Yeah, when you got a buffer.
I remember you telling me that, like talking about going into live trading, like as soon as you have that buffer, it all changes. You know, you just feel like you got that breathing room. Not to be silly, but just stress free almost. You know, you're not I'm in drawdown.
Yeah, exactly.
Just that confidence, eh? Because I think we were talking about it on another podcast, how bro was getting into lives.
Yeah.
It's like, I'm going to chuck 100K in straight away. It's like, bro, don't do it, man.
You should have.
Hey, should have now.
Still in the
50% up. But yeah, like it's a difference just chucking 100K in as opposed to growing an account to 100K. You know, like that's gonna, like trading that 100K that you've grown and trading 100K like actual capital that you've just put in. Bro, your psychology is so different on those two accounts. You know, you go down 10% on a 100K, which is 10 grand. You know, like what's your psychology then? It's crazy, bro. As opposed to, you know, you taking all of the time to get to that 100K. You know, what's your psychology going to be there? Like, realistically, you'll know where you can over risk. You'll know, you know, if you need to de-risk or, you know, what sessions you want to be trading. But you still have that confidence that, like, I've already traded all the way to 100K. I've made so much profit that I, you know, if you lose, who cares? Yeah, it's different. I think I've always had that sort of dynamic approach, with risk management.
True.
And I think a lot of people online talk about just having a very fixed risk management plan.
Yeah.
Like it's a very good, you know, everyone talks about 1% risk, 1% risk, you know, this and that. But realistically, no one's doing it.
Yeah. It's so true.
Everyone's sort of like very dynamic depending on their strategy and how, you know, they're trading in different trading sessions. And even like beginners, you know, like they'll get the confidence that, like I see this set up all the time, and they'll start risking more and winning more. And it comes down to sort of that consistency of, you know, if they can do that all the time. I think where a lot of people go wrong with their risk management is because they end up getting those wins during, say, London session predominantly, that they'll take that same strategy and try and trade it in like Asian or, and then it's not working, and they're like, oh shit, like I don't know what I'm doing, sort of thing.
Yeah, that's a good point.
Yeah, but you sort of just got to change it up with every session. But I think a lot of people will have that dynamic approach to risk management without even knowing it.
Yeah.
Rather than just having that fixed.
Bro, with your challenges, does your risk management change when you're in drawdown?
No.
Do you de-risk?
No.
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 Not here to muck around, eh?
Yeah. Yeah, if I lose a trade, like say if it's a 50K account, risking $500, just trying to make that 1 to 3, just like, you know, just like you did. That's cool. I've only got, you know, I've got 4 trades essentially to pass this combine. So yeah, I just treat it like that, bro. Like for me, it is what it is. It's only going to cost me $50.
Yeah.
So like my psychology really isn't affected. But when it comes to a funded account, dang, shit changes, eh?
Yeah.
Do you mean like actual funded? Like live funded?
Yeah. When it's live, then I'm switching it up.
Yeah, no, it's just interesting because, you know, you hear people going into drawdown and then de-risking.
Yeah.
And then taking them twice as long to get back out, you know?
Yeah, bro. And it's funny, like...
You did that, eh?
For...
Like on one of your first accounts?
Yeah. Yeah, for the HFT one. Yeah. That was, I think I was... Oh, that's when I just started with you. So I think that was like the first month or 2 that I was trading. Yeah, and I talked to you about that. And like, if I just, you know, risked the same amount, I would have been out way, you know, ages beforehand. But my psychology was like, man, I can't do this like within 9 trades that I've got left. So at that point, I didn't have the data, I didn't have, you know, the strategy locked down. But Yeah. But yeah, when it comes to
Just to clarify, did you get out of that drawdown?
yeah. Yeah.
And so you saying that you didn't have the strategy or like the data backed up,
Yeah.
but you had somewhat of an idea of like how to trade,
Yeah.
and your risk, like de-risking, got you out of drawdown.
Yeah.
That's powerful, eh?
Oh, bro, 100. But I think it was just like, essentially for me, it was kind of like live testing at the time, just so I could get my psychology and emotions involved in my trading. And because, you know, I was risking that 1% that first trade, and I noticed that my emotions were just like, holy, like, I never lost $1,000 before. And seeing that go down, and I was like, far out. Fuck, did I just lose $1,000 in like five pips? Like, you know, just like, hey. So yeah, that's when I just switched it up, and then got the confidence after building the data and that. Yeah.
So for, you know, a lot of the beginners, even like intermediate traders that are sort of, you know, watching this and don't have risk management sort of locked down yet, what do you think would be the ideal approach for them to create that risk management plan and go about their trading, either going into it first or just having been in it for a while?
Would you agree for a beginner to have a fixed risk management?
Yeah.
Like low risk,
Low-risk.
but fixed?
Yep.
Until you have that time in the market?
Yeah, like enough risk that it's kind of like not too heavy on your emotions, but also your emotions are involved. Just so it feels like you do have that skin in the game. But yeah, completely agree. Like, yeah, some kind of fixed, some fixed percentage that will help you. Like if it's I don't know, like 100K account, you got 10K drawdown, like 1%, you know, if you're confident that you're going to, you know, get into profit within 10 trades, then sweet, risk that 1%. But if you're not, then maybe, drop it down to 0.5%, because then you got 20 trades. Really, yeah.
And then just that time in the charts, in the markets.
Yeah.
And bring in that dynamic approach, eh?
Yeah. I think risk management is probably like the last kind of tool to add to your toolkit. Like once you've got the strategy, you know how a chart works, you know how market structure works, price action, all of that kind of stuff. Cool. And then, like, you know, you want to work on like your trade plan and like, you know, when you're going to get into a trade, the market timing, sessions, all that kind of stuff. And then that's when you start to bring in risk management. Like, so then you have a better understanding of how the market already works, where you're going to enter, and then you know, like, how much do I really want to get involved in this? You know, what am I willing to risk? That's probably the last piece to the puzzle. Would you agree?
Yeah, like I think when it comes to, you know, having a foolproof plan with the whole thing of trading, it comes down to your edge, comes down to your trade plan and to your risk management. That's what sort of profitable traders can say, you know, want in their sort of toolkit, you know.
Yeah, because it's like trading is just like such a holistic thing. Eh? You need everything all at once, but like,
is that what holistic means?
Yeah, you know, you want everything.
Yeah,
the whole piece of the pie. Like, if you have one piece of the pie missing, that could be your risk management.
Yeah,
then you know you might not be a profitable trader.
Yeah.
So like, if you can like kind of learn a strategy first, learn like market timing, entries, all that kind of stuff second or whatever. Like, I guess that's all kind of one thing, and then start to involve or add like risk management in there afterwards. Then, yeah, because like when I first started, bro, when I was like, you know, the $100, didn't know what risk was. I can't remember how much I was risking because I didn't know, you know, what a lot size was, and so to make 150% in one night, like
Crazy.
But that's just like you're not knowing what risk was, not knowing the strategy. That was just all luck, and then to actually, you know, get back into the market the next day and then losing it all.
Yeah, that's right.
You know, it's just like,
Were you just scalping it?
yeah, bro. Yeah. Like, when it was going up, I was getting in, just watching it go up and then get out. Yeah.
With that though, like a few questions. First, making that $150 account, do you know how many trades you went into?
Oh, heaps, cuz.
So you went into heaps of...
Yeah.
Right, okay.
It was, like, I remember because it was like a red folder day. And I didn't know what a red folder was. I just remember watching the streamer talking about, there's this news event coming on. I think it was a big one, USD red folder. And gold just melted, bro. And I just like jumped in, got slipped heaps. But because it melted so much, I took away, I don't know, it was a lot of profit. And then gold just kept melting, bro. So I was just like, sell. Like,
damn.
Yeah,
Just getting into the trade continuously.
yeah. And then the next day thinking, oh, that's easy. Let's just do the same thing again.
That's
got
easy
chopped
as wild.
Yeah, bro. Chopped up, lost the account. Like, oh.
Gold had finished its retracement. You're still in cells.
Yeah, bro. They just created the higher low.
Second question. Were you trading the first day and like whatever session you're trading, but on the second day, was it around the same time?
Yeah.
Oh, yeah.
Because it was another red folder.
Oh, true.
Yeah, bro. Yeah.
Yeah.
I can't remember. What's the back-to-back red folders?
I think it's Jolts Jobs and ADP. ADP, Jolts Jobs, and then NFP.
Yeah, or something
Was
like
it
that.
start of the month?
Yeah, it was February too, around this time, I think. Yeah. And then that's when I was like, I don't know what I'm doing. Who's going to teach me and tell me, this multi fella on TikTok?
I'm the pokey machine.
Sounds like a lad. Sounds like the man. Yeah. So as beginner, fixed.
Yeah, I would recommend fix because you don't really know what a dynamic risk management plan is until you've got time in the market.
Yeah. That data collection,
Yeah.
and then having confidence in your setups.
So at what point in everyone's sort of journey do you think that they should start looking at risk management?
Just like the process after you've got time in the market.
Yeah.
Yeah, got some data behind you.
That's adjusting it.
Yeah.
Yeah, adjusting it to dynamic or whatever. But obviously bring it in as soon as you can.
Oh, yeah.
Yeah. Is that what you meant?
Yeah.
Yeah.
Yeah. So as a beginner, like they're starting out their journey, are they looking at risk management straight away?
Comes with the trade plan, eh?
Yeah, like coming back to the whole holistic thing. It's all kind of like you're learning everything all at once.
Yeah. It's a hard approach, eh? Like when you
Yeah.
think about it, like there's so much in trading that you've got to be learning and doing. Like it's not just and I think a lot of people make that mistake is they look at trading like, oh, I just need to learn this one thing and then boom. But there's so much variables to it
Yeah.
that it does take you learning every single thing. Actually, yeah, like thinking about it, I get a lot of messages like, how long do you think it's going to take me to be able to make money in trading? And it's sort of like, I can't even tell you that.
Yeah, because there's so much to learn. But if you can just break it down to strategy, trade plan, risk management, it's probably like the easiest way to go about it. But if you can kind of learn everything all at once, and juggle all those things, then you'll be way better for it. But also it'll just be a lot more difficult to learn.
Yeah, if you're placing a trade, you need risk management.
Yeah, yeah.
Yeah, that sort of brings me to the point too is as a beginner, if you don't have risk management, you shouldn't be trading.
Yeah.
Eh.
That's what I mean. Like if you're placing a trade, well, you should know what you're risking.
Yeah.
So you should have that risk management plan. Yeah. But if you're just forward testing, back testing, then obviously you don't know.
Yeah.
You might not know your risk management plan by then.
Yeah, because if you're just learning a strategy, you just want to know if you're right or wrong. So really, learning a strategy, you should probably be trading demo to learn a strategy, and you just want to know if you're right or wrong. So it doesn't really matter what you're risking in a demo account.
Yeah.
Like, just as, you know, like if the zones are hitting, you know, if you're getting a 1 to 3, that's all you really need to know. Or like, you know, if it's going the right way, you're not getting stopped out.
I've said that to so many people though.
Yeah.
Is the whole just use demo accounts purely just to figure out whether you're going to win or lose. You know, figuring out that win rate.
Yeah.
That you don't take that monetary value into consideration as to, you know, what you're going to win in the market.
Yeah, doesn't matter.
Yeah. It's just win or lose. That's all you're trying to use it for.
Yeah, that's like when I had that 2 to 3 months of just data collection.
Yeah.
I didn't have risk management, but because I wasn't placing trades.
Yeah.
I was just putting them in trading view and seeing how they'd play out, you know.
Yeah.
I didn't know. I wasn't risking anything.
Yeah.
It wasn't a real trade.
Yeah.
Just seeing whether you're going to get the win or the
Yeah.
loss. Yeah. That's a good
Win or
point.
lose.
That's a good point to, you know, starting out real early, or not starting out, but just starting out in trading is once, it's probably like a step-by-step thing, like learn the strategy, practice that strategy with, you know, gathering data to see whether or not you're going to make it work. You know, is your win percentage going to be good? Yes or no, which means that when you do go into the market, or say like practicing on an FX replay, and now you are, you know, sort of taking that 1% risk, you know what your win rate's going to be, because you now do have like that stop loss in place. I mean, obviously with the data collection you will have a stop loss, but you don't know what your risk is going to be. But now you know on average how much you're going to win per trade and how much you're going to lose per trade, and how to manage your trade throughout that whole thing. So yeah, huge difference. Need to be able to, as beginners, figure out what your fixed rate, your fixed what do you call it, risk management plan is going to be. And as your expertise and knowledge grows within the market, then you can sort of switch up and go more towards the dynamic risk management plan. Yeah.
Especially if you're switching between challenges, lives, funded lives.
Yeah, it's all different.
It's all different. Well, that's how I treat it.
Yeah.
That's what sort of gets me crossed up too, and like why I don't like trading the challenges and the funded lives is because my main accounts are just lives.
Yeah, true.
And so that's why I don't really care about the funders, because like I will just like change my whole risk management plan up.
Yeah.
Like I'm not going to jump onto a challenge, you know, trying to win 1 to 2s and risking 1%. Like it seems so pointless to me.
Yeah.
I'd rather know whether or not I'm going to win that account in like a day or two, and then, you know, away you go. You're like,
Yeah, but as soon as you start trading real money, whether it's going to be a live account or a challenge combine or a funded, like you should have a risk management plan in place.
Yes.
But what it's going to be is going to be up to you. We can't sort of just tell you what that's going to be, because it comes down to your emotions as well as a person, as to how much you can tolerate, what your risk tolerance is going to be as well. You know, there's some people that even have live accounts that are still only risking like 0.2% of their account, you know. And like for me, that will be under risking. But then for other people, you know, it's just what they can deal with emotionally.
Yeah, that's a good point.
Yeah. So that's about it. Like that's about it with the risk management. Like it's very clean cut. You're either going to have like, you know, this sort of risk management plan, or you're going to have this sort of risk management plan. It all depends on what your knowledge is going to be. And it's hard too, because you can't really acquire the dynamic risk management plan until you actually have that education. It's like you have to go through all it. Like you want to be doing it early on, but you have to go through all of that process.
Yeah.
Oh, that's crazy, actually. Like you're thinking about it.
You just trust the journey, eh? Like it's
Harder.
all in the journey. It'll come.
But it's inevitable that people are going to lose.
Yeah.
because of that, they have to go through that risk management experience, I guess.
100%.
Oh, that's rough. You can't just give someone like, this is the golden nugget, or the golden trade plan.
Yeah.
Stick to this and you'll never lose.
Yeah. I mean, if you do have 100% win rate, hey, risk it all, full marge every time.
Yeah. Well, yeah, that's a good point too, because like as you were saying before, with that funded account, you got 10 trades.
Yeah.
And just with those 10 trades, if you are, your win rate's going to be whatever, and you know that you're going to make money over those 10 trades, then, that's what it's going to be. But I think that's another thing too, is I was watching this, he must have been a hedge fund manager. And, for example, your win rate is a 60% win rate, right? You don't know when those wins are going to come. You could lose the first 4 out of the 10 trades you're going to take and then win the next 6. But if you're losing the first 4, right, then that takes your, 100K down to 96,000. About 96,000, right?
Yeah.
Which means if you're going to make, 1% back of that, it's only, what's that, $960? Does that make sense?
Yeah.
And so winning that 4% back is actually winning more like 5 to 6%.
Yeah.
Which like a lot of people don't understand either.
Yeah.
And so it does take, a little while for you to get out of drawdown, as opposed to continuously winning and then risking still 1% of, say, 110K. Or winning 1% of 110K. Like, that's the difference as well.
Yeah, because what if you lose 50% of your account? You have to make 100% back to get to your initial balance.
Yeah. Yeah, like, that's crazy.
Yeah, that's why you need a risk management plan.
Yeah.
Yeah.
And like that, you're not, like, even if you lose that 50% and you win 50% back, it's not going all the way back.
Yeah. You're back at 75% of your account.
Yeah.
Initial balance. Yeah.
That's crazy, bro. But that's pretty much it, team. Like, as a trader, you want to increase your knowledge so that you can develop a very, very good risk management plan. That's likely not going to come until, you're deep within your journey within trading, and you have that data collection. Once you're deep into your journey, then you'll be able to get that data collection, be able to understand, what you can be risking, what you want to be risking, and what you can sort of tolerate. And it is, sort of that learning journey, getting to that point. And inevitably, you will have to go through those lessons. Like, there's not a risk management plan that we can give you and you can just go off it and, everything's going to be gravy. Your win percentage comes into play, all of your statistics come into play, and it's how you're going to approach sort of your risk management, but also trade management. You want to be protecting your capital as well. So hope everything that we've been through today helps. And that's sort of like how we've approached all of our trading as well. Yeah.
Yeah, trust the process, team.
Lessons, not losses.
That is the quote. That is the quote.
Well, it helps me sleep.
We'll catch you guys in the next one. Please don't forget to like, subscribe, and drop a comment down below. Tell us what your risk management plan is, if you have one. And we'll catch you guys in the next one.
Trading highs, oh what a ride. From doubt and fear to joy inside. With every lesson learned I grew. Ambitious investing pulled me through. One night I made 28%. Now it feels